What kind of money did you see guys make down on that floor?
I think good traders would make millions of dollars, good traders. And on our floor, there were about 2,000 traders just on the SIBO. And like I say, the good ones are leaving with 5 million, 10 million in a good year, things like that. And I think all the guys upstairs in New York figured out that if those guys are making that, if I can turn this electronic and get rid of all those guys in the middle, that's my money.
Yeah, yeah.
I can be that guy and eliminate 2,000 people, and all of a sudden, you know, instead of that being $1 billion or $2 billion that's being made, that drops onto my bottom line.
Yeah. Well, and there's a great movie called Floored that you were in as well that talked about kind of the story of a lot of these traders and then how it kind of disappeared as well. But it was interesting, like one of the guys is saying, like, I don't have any health insurance. This is my own money. So if I get stopped out on West Texas Intermediate, it's it. It's over. My savings is gone. I go home to nothing. Yep. It's not like some corporation is bankrolling you.
Right.
So when I was in Chicago, I was at First National Bank of Chicago, that big, beautiful IM Pay building down in the Loop, and I was on the 6th floor. We were trading our interest rate derivatives, but we always used to talk about the guys down in the pits with the big fucking balls that would go in there and make markets in the face of fear, because that's what you do.
Yep.
Call in, where's the market? No one knows where the fucking market is, but you guys made the market, and you might get slammed, you might get hit, you might take hits, you might take losses, you might make wins. But that takes a serious amount of discipline, of moxie, and that's why you get to these weird, like you said, you know, superstitious things these guys have. We knew one real big local that said, if I had a bad argument with my wife the night before, I wouldn't even go in because I'm going to make bad decisions, because I'm going to be emotional and angry, and I'm going to lose money, and he would just stay out of the pits. I heard all sorts of stories about that. Is this accurate stuff I'm talking about?
Oh, yeah. I knew guys, Brian, that when they got to the elevator to go either up or down to the floor, they'd press a button, and if a down elevator came and they needed the market to go up, they wouldn't get on. And they wouldn't even go to trade that day. They'd say, screw it, you know, I need the market to go up today. I've got 3 down elevators in a row, I'm out. You know, that kind of stuff. But as strange as that may seem, I think a lot of the, like you said, the guts that it took to stand in there and do it, the reason that they do it, of course, is money, but it's also the closest thing that I ever found to that sort of applause or those endorphins going off in your head when you were playing pro football or college football or whatever. It's so addictive because when you're making money, it's just, you know, the greatest feeling you can have is knowing that you were stacked against all of these people and walked out making a bunch of money that day. Nothing felt better than that. Except, I asked, you're a fan of Billions.
Yeah.
So there's this coach, a performance coach on there named Wendy. And she's the wife of Paul Giamatti. And she works at Axe Trading. And Giamatti is the Elliot Spitzer character, of course, in Billions. He's the attorney general. So she coaches the guys into getting in there and making the most money. I've met a couple Wendys in my life, and I've always asked them, I said, feels so good when you make money. I mean, you know, it's just the best. But I said, I've never understood why losing any amount, if I lose $1,000, doesn't matter that I made 100,000. If I lose 1,000, it feels worse than the 100,000 feels good. I said, why is that, Wendy? And then she said, John, that's the easiest question I ever get. And here's why. She said, that's nature. Nature is telling you, don't screw up. Don't fuck up. Don't do that. Because when you lose, even though you've cut your loss, hopefully, and you know you lost $1,000, she said, that's gotta feel bad. And it's gotta feel worse than this feels good. Because if you're a wolf and you're out there and you're the alpha and you take down an elk, that means that the whole, you know, your whole herd eats well that day. You eat first, but everybody in there, they're all sniffing your butt and they're, you know, rubbing up against you and everything else. And you feel good because you were that alpha that took down that elk. But now, a couple days later, you're out there looking for another elk and you smell the smell of another pack and you know, uh-oh, I got to get the hell out of here. I'm by myself. I'm the scout, and I'm out here by myself, and I smell that there's another pack here. I can't make that mistake twice. If I do, that other pack will rip me to shreds if they find me.
Right.
So she said that's why losing has to feel worse than winning feels great. And that's something you have to deal with when you're a trader.
And that's where the discipline also comes in as well, because if you let yourself run by those emotions, then you won't be a good trader. And the discipline something is again hard to explain, but people always heard you should buy low and sell high. But if you're an untrained trader, you will actually do the opposite.
Yep.
You'll buy high and sell low, because when these positions start going down, so say you bought a house for $1 million and someone tells you it's only worth $500,000, most people will say, let's just hold on and wait. And a lot of people as well will do the opposite. If they sell something and it goes up, they're like, oh, well, then let's sell more because it now looks more attractive. Both of those things will get you killed in a trading environment.
Right.
So you actually have to act the opposite of human nature, which is why you need that discipline, right?
Right. That discipline is everything. And it's similar in Vegas. They call it good money after bad. If you're sitting there at the table and you're pushing in good money after bad, you got to step away from the table, get your mind straight, then you can come back and go at it again. But if you're betting on, a bad hand, that's the fastest way, doubling down on a stock is the fastest way to go broke.
Yeah.
Because there's nothing that says it can't just keep going, just like nothing that says it can't keep going up if you're shorting it.
Yeah, I'm getting some flashbacks to some Gordon Gekko lines here. So Gordon Gekko once said, never get emotional about stock, right? And he also said the most valuable commodity I know of is information.
Yes.
And that's why you want to know what's happening in that pit. And that gives you everything. And when I later worked as an interdealer broker, my clients wanted me because I could give them the information. And you couldn't get it on an exchange or on a ticker. You had to know because I knew what Goldman was doing and Morgan Stanley was doing, and that's what I could do with a few phones on a floor of a building. It was down to that information. And so that's super important as a broker.
And it still is.
Yeah.
I mean, just to your point real quick, the reason when I started trading and I went into the IBM pit, I traded IBM. It was the only place IBM traded in the United States was in Chicago in the options exchange, the Chicago Board Option Exchange. Didn't trade anywhere else. So I saw everything. I saw Goldman, I saw Morgan, I saw Prue, I saw Bear, I saw Lehman, I saw everybody when they were coming into the pit to buy or sell. So you knew again where that big seller was or where that big buyer was. And that information was invaluable. But we didn't realize it back then. We just thought we were great traders reading the tape and we were making, millions of dollars doing that. But then the SEC said, you know what, Brian? We think that you're colluding to keep prices wide. We think that IBM should trade on the Amex in New York and on the Pacific in San Francisco and on the PhilX over there in Philly. And if it doesn't, we're going to accuse you guys of rigging markets and you're going to be subject to antitrust and everything else. The exchanges listed everything everywhere. So all of a sudden IBM trades 4 different places. Now how smart are you? As far as me, I wasn't that smart because now I'm only seeing a quarter at best, or maybe 30% if we're really competitive in Chicago. I'm seeing 30% of that picture, and not seeing Goldman, not seeing Morgan and all the rest of that meant I'm not so smart.
Right.
I don't know where that stock is going the way I used to. The seat prices fell from $700,000 back down to $200,000 in a matter of months because traders weren't making the same amount of money.
Interesting.
And then that's why we developed that algorithm. You weren't trying to lead me into that, but I'm going to throw that one. So we built this algorithm that looked for unusual trading patterns in the market because it would reassemble the data of as if IBM was still just trading in one place. So we'd look at the time-sensitive data of every trade that's happening in San Francisco, Chicago, New York, and Philly, and put it all together into one spot again, except it's electronic. The algorithm is grabbing it and telling me a block of stuff just went up over here, John, and it went up on the offer. That means they bought it.
Right.
Or it traded here on the bid. That means they sold it. So then I could go back to doing what I did. And I started, making money again
Yeah.
But it was a rough 6 months or a year when you're not making that money.
Yeah, well, they say necessity is the mother of invention, and you've done that, and you're always at the cutting edge of information. I know, we were even talking last night, you're always looking for new information sources. And
True.
So again, for people, if they want to go deep on your algorithms and your trading methodology, there's a link below. We talked about it, your weekly options profit strategy, or londonreal.tv/options. Also, you got this event, America's First Option Millionaire Summit, which is incredible. Hi, it's Brian Rose from London Real, and I've just sat down with Jon Najarian, legendary options trader, Hall of Famer, and TV celebrity. You might know him as host of CNBC's Halftime Report, or from his books, How I Trade Options and The 22 Rules of Investing.
I think there's just so much information in options that isn't available in stock. I think it's all about leverage and defining your risk. And if you can do those two things, I think you can be in this game a long time and make money.
Well, in just a few days, Jon will finally reveal what made him a legendary options trader. In a private broadcast that won't be available on YouTube or anywhere public, he'll show an exclusive group of people how he's been using special infrastructure that's only available to institutional investors. Something that allows him to get a critical piece of information directly from the market exchanges. Information that can tip you off about big market moves a few days before they happen.
We built this algorithm that looked for unusual trading patterns in the market. Once you find those patterns, then it makes it a lot easier to coattail on the smart money.
Now, as a former Wall Street banker myself, I am super excited to share this investment strategy for the very first time. As the host of this episode, I'm able to offer you exclusive rights to a seat at his free training. But you must act now to secure your place. So click on the link below or go to londonreal.tv/options to lock in your spot. And I will see you there.